Hey guys, good evening. This is Simon with Trade and Perform Coaching, and I am, if I get hat right here, first of all, I'm getting prepared for tomorrow morning, and I have no idea what the open will look like tomorrow morning, nor do I need to, but I want to be prepared and have an understanding of the lay of the land so I don't have to waste a lot of time with it during market hours. And so this is for members of my room, my trading room, but I'm going to post this to the public in general. So a couple of disclaimers. First of all, this is for educational purposes only. It is not a trading recommendation. The purpose is not to follow me blindly, but to learn to trade for yourself, to understand market structure and take a large market structure and zoom it down to very tiny proportions so we understand what we're looking for. Hopefully I'm going to accomplish that in this video and relatively brief period of time. I'm not good with brief, and when we have these kind of ranges, it's kind of hard to put this kind of in a small nutshell and go, well, this is what's going to happen. Boom. We have no idea where we're going to open to start with tomorrow morning. As I speak, the NASDAQ 100 futures are down 73.25. ES futures are down 33. That puts us down a pretty solid amount, close to 200 points off the open. For tomorrow morning, NQ would be down almost 70 to 100 points out of the gate. Now, we may be flat by tomorrow morning. We may be down another 100 points by tomorrow morning. I have no idea, and it doesn't even matter to me. So this is how I put together my day for the following day. So the first thing I want to know is a couple of key points, especially when we have wide ranges. Where are the 50-60 retraces, right? So the 50-60 from the 21.26 to the swing low down at 18.29. Here's the 50-60 area right here. I'm just going to mark it off. Markets tend to like to retrace 50-60 moves, and this market is no different. See if I can get that done here. There we are. 50-60 retrace. And then the next natural question that comes up, guys, and this is 101. There's no secret here. I did not invent Fibonacci. Markets like 50-60 retraces. Forget the extensions up here. As a matter of fact, let's get rid of those. Let's get down to the basics. Okay, so here's my other 50-60 on the downside. Is sitting down here between, let's see what that is. And wow, the numbers are so small, and I just must be getting old, but I believe this is 1931, right where we traded to tonight. The swing low so far in this move to the downside has been 1931 even. Lo and behold, there's the 50-60 retrace where we get responsive buyers back up. The 62 retrace is sitting down here at 1900. Now, for those of you who don't follow me, you should be aware there's a pattern at the 50-60 retraces that is often followed, though not always followed. And that pattern is this. We will come to a 50-60 retrace, reject off of it, and then come to the 62 retrace to squeeze all the stops, run it back just behind the 62, and then trail off. They do the same thing on the downside. They'll run it to the 50 retrace. Everyone who's read any books about Fibonacci will go, oh, I'm going to buy at the 50 retrace and put a tight stop on it. They run you to the 62, then they pop off. It does not have to follow this pattern. It can just, in a strong market, it'll hit the 50 and ricochet hard. In a weak market, it'll hit the 50 and ricochet hard. But in most markets, you'll see the 50-60 get retested, hence the term the 50-60 retrace, right? And you just need to be aware of it. Statistically, the 50-60 retrace is a good place to establish swing positions, right? But it's not a guarantee on any given day, and I certainly don't trade on just the 50-60 alone, but it is an area to draw my attention to. Okay, so getting rid of that drawing, and let's go back. So now we know where the 50-60s are. We'll get rid of the retraces here. Okay, so well, hopefully you'll mark them down because I'm not going to pull them back up. The next thing I want to know is, where was last week's low? Which, if this is Monday, 1, 2, 3, 4, 5, here's last week's low. It's also the swing low. And where was last week's high? That's easy enough. Okay. From a trading perspective, guys, right, we are not ultra bearish, or there's really not a bearish sentiment to be had until we're trading below 1831. It's last week's low. It's technical analysis 101, right? We have to break the current week's low in order to maintain a bearish trend to the downside. So as long as we hold above 1831, given there's been damage, there's no question about it, but it's not uber bearish, right? The next question is on the upside, right? We have to break this 1990 to the upside in order to work. So my next question is, where are the open gaps? And there's always a discrepancy on the volume profile between the open gaps according to the volume profile close and the open gaps according to the CME. I would go with the CME close. They post them on their website. You can go and see where the open gaps are. And I'll convert mine when I move this over to a 5-minute chart, right? But this open gap at roughly 1937, again, I'll adjust it. It appears there's an open gap here that did not get tagged. And if I recall correctly, it did not actually get tagged. We missed it just by hair at 1872. Those are the two opening gaps that are down here. My next question is how far on the upside, right? Although I'm not as worried about the upside at this point. If we break 1990, my primary upside target would be this 2024 area. We've really struggled in getting above 1990 for 3 days. If we got it, I imagine we'd make a beeline for that 2024. I'm not going to worry about it tonight given the downside rotation. I'm not really going to worry about anything above 1990 right now. I'm cognizant that 2024 is above an open gap and a natural magnet. If we got really somehow crazy extended, let's say the Fed did some kind of intervention or introduced a new QE, that 2072 would give us a big extension. The thing that has me the most concerned is if the market gets illiquid. What was the biggest down day that we had? Well, first of all, there is a gap over here, right? And all I'm doing here, again, I want to stress this, all I'm doing is I'm setting up the structure for tomorrow. Can this seem overwhelming? Remember, this is all background information. We're not making any trading decisions off of this. What we're doing is setting up where are the major mile markers. And I don't want to have to do this in the 45 minutes before market tomorrow morning. So I want to get an understanding of where those mile markers are before I get in tomorrow and have them marked off on a larger map so I understand where the major trap points are. So with the information we have right now, I can tell you two things. First of all, key, obviously, today's low, today's high. All right, I'd have that marked off. Easy enough. All right. This is a trap point at this point, this 1962, right? If we get above after trading below, if we get above this 1962 or we open above 1962, as long as we hold above it, you will have trapped a bunch of people on the short side of the trade or a bunch of people panicked out, and we will actually have a decent shot at getting to that 2024. Not holding my breath for that scenario. Okay, so tomorrow morning, the first thing I want to know is, are we trading above or below 1937 3/4? If we open significantly below 1937, let's say we open at 1915, I would expect that 1937, this open gap, is going to provide some resistance, right? When we come down from above on an open gap, generally speaking, I expect the market to ricochet off. Therefore, when we gap below, again, these are generalities and not specifics, I would expect a potential V-shaped reversal. Now, I have a secret weapon in helping me determine these trades in that I have a swing trade indicator. It's proprietary. I don't publish it. I publish the results, meaning when there's in my room, when I get an indication of swing long or swing short, I post it, but I do not share the indicator itself. Some things you got to keep private. Some things are just too valuable. So I'm trying to combine the swing trade indicator, which I have no idea when it'll fire tomorrow, along with the zones. So I generally expect if we open below 1937.75 to find responsive sellers, as long as there's more than a 10 to 15 point rotation into this area, responsive sellers. If we open above 1937 in the morning and we don't push below, we could very quickly find responsive buyers back to the upside, and if we can get above 1962, it would be pretty easy to drive towards that 1990 level tomorrow morning. Again, a lot of unknowns because we have no idea how the market will trade overnight or what the issue is with China or how that's going to affect the U.S. markets, nor do I need to know that, right? So if we open above, or if we open below 1937 but above 1872, I would expect the first move into 1872.50 to provide responsive buyers for at least a tradable rotation back to the upside. That's without any technical indicators. These are the two areas where I suspect we're going to find major inflection points here tomorrow. Remains to be seen. Oh, one more thing before I get to that. How am I going to protect myself from an open that drives straight down or open that goes straight up. And that's very easy. I have a trading rule that says I do not take trades in the first 30 minutes. That generally protects me from markets that drive straight down, straight up. It certainly protected me on this day here. Okay, I did not get stopped at all, even though I was trying to take longs against this move, and primarily because I avoided the entire first hour in its entirety, and it did not harm me in any way, shape, or form. As a matter of fact, this week went down as my best week in 3 years. It was really fantastic. So, erasing that, again, to reiterate where I'm looking for tomorrow, here and here are the two biggest areas of concern for me in the day. The next question is, well, how far can we reach down? So what I want to know is, what is the biggest ranging day and what was the average ranging day? So the widest ranging day we had was this day right here, right? The high was roughly, let's call this 1950. The low was 1831. So that's 70 plus 50. 70 plus 50 is 130 points of range. If I have 130 points of range and I open here at 1936, where we're trading right now, the underside of this open gap, that actually puts me all the way down to 136 is 100 points, right? And then another 30 puts me all the way down to 1800. That's if we mirror this day. Okay, that's an extreme. We'll go back and see what's at 1800, but we also know that round numbers are very important. That's another area where I would look for responsive buyers, is that they're round numbers. 1800, 1900, I would suspect that we're going to get an attempt at responsive buys, or at least a tradable rotation back up, right? So let's go over that again so I can keep building my argument for y'all. Open gaps, important. I know that I have a potential of possibly pushing down to 1830. We could push further than that. There's no rule that the market has to follow, but that gives me some guidelines. I know that round numbers are important. I expect an attempt to at least pause and rotate, counter-rotate at 1800 and back to 1900. And I want to be clear, the pattern I'm looking for, even in the most volatile of days, right, when it's really scary, the market just goes straight down like this. This happens less than 4% of the time in the market. Problem is that when it happens, it's scary as hell. Why? Because if you're not a disciplined trader, you can beat the crap out of your account, quite frankly. So what do you do in this scenario? I have a very simple rule. I can handle a total of 8 ES points, really 8 to 12, but I usually keep it right at 8 points. I can tell you tomorrow will be at 8 points. 8 points of loss on a full-size position. When I know the range is extended, in order to give myself a fighting chance, because my stops will increase along with, when the range increases, my stops have to increase. So what I'll generally do is cut my trade size in half, right, so that I can cope with the extended range, but still survive the stops so I can get to a profit, right? So now that gives me 16 points to work with, but on half size, right? Again, my other safety valve, I'm not trading the first half hour of the day. I won't get ripped to the upside and I won't get ripped to the downside. And then I'll rely on my swing long and swing short indicators to start giving me a clue as to where I can start fighting for longs and where I can start fighting for shorts. And I have a very specific setup within that. I'm not going to cover that. I can do that in the room. I don't want to confuse issues. The idea is to give a bigger picture here, right? So we've done that. We know that if we mimic this day here, that we can push down to 1830. We know that we have open gaps at 1872.50 and 1937.75. Please go and verify those on your 5-minute charts. That's probably more accurate than the volume profile close. The volume profile close reflects the 415 close, and that is not necessarily CME settlement. Okay, so let's get rid of all this. So the first question I have is, what's below 1872? Very natural question. I'm going to go look. And we're going to have to go a long way back, so we just might as well just drag this thing over. Ah, there we are. So we know this gap got closed. It left another open gap here. And lo and behold, if you will look, there's another roughly open gap right here at 1827. And I'd be willing to bet dollars to donuts we get some type of tradable response, plus or minus 10 points, if it's down here. Again, the only scenario where we don't get a responsive buy is if the market does absolute meltdown city, right? I cannot avoid this, nor, this happens so rarely, right? The usual pattern in the market is this, right? Just like we did today, and I can demonstrate that. Let me show you real quick. Here's today's chart. Yeah, let's get rid of this because today was a perfect example of this, and so was Friday for that matter. So here's my charts for today. This is where I got my swing long. Here's where I got my swing short. But if you look at the pattern, which is what I'm trying to show you here, right? Look at this pattern. So we came from here, right? We gapped down. We closed here. We gapped down. So imagine a solid bar coming all the way down, right? What did we do? We hooked up. We came all the way down. We made a retrace all the way back up. Then we hooked down. We pushed all the way down, and then we hook up. This is the natural pattern of the market, right? There's always some variation on it, but the market likes to hook back and forth. This confounds people who need the market to behave in one particular way, okay? And one of the key changes that I think is going to happen now that the Fed has lost its lock from QE on the market, what people were used to was just a series of V's like this all over the place. And I think instead we're going to experience a ton of this. You better be a damn good day trader to take advantage of this. Missteps in this area really cost you. And I want to show you something. This is where we had our longs and shorts today. We sold we get our swing short here. This is our entry 1. There's 4 points of entry. We got entries 1 and 2. There's 4 potential entries. Entry 3 was back here, and had we pushed up above and closed back in, that would have been entry 4. That never occurred. Only entry 1 and 2 took place. Again, takes a little more work to understand that, but there's degrees of aggression, I think would be a best way to key that. If you look on the bottom, right, we get our swing long here. This would have been entry 1 here. You'll notice even on entry 1, you would have gotten scales to the upside. This would have been entry 2. Entry 2 would have stopped you today. But importantly, entry 3 and 4 are the most high odds trades that we have. And there was no entry 3, but this was entry 4 right here. And entry 4 was worth a shot all the way up to 1976. The high volume node was sitting here. And then I left. You can see all this downside actually took place after the market, the NYSE closed. It was in the last, well, I guess this one last bar was right on the close. And then this last little part was in the last 15 minutes after the market closes. And we traded all the way down to 1963 and a quarter. So at any rate, long story short, it was a very successful day. The point of that was this. This is the natural motion of the market. Even when it extends down hard to the downside, it tends to have big hooks back up. And my focus is on capturing the hooks here and capturing the hooks here for pushes back to the upside and downside and managing risk. So let's erase this here, guys. Okay, so I have no doubt that the indicator will publish swing longs and swing shorts tomorrow, and I'll be prepared to make money off of it. Going back to the volume profile really quick. Why am I not on the volume profile? Here's the, I see. There we go. Here's the volume profile. We know that we have an open gap down at 1827. That would be a huge stretch. I would expect a response, right? And then we know that we have, if it really gets nuts, down at 1790 and 1800 are important numbers psychologically. I would expect a response to buy out of 1800 to 1790 for a move back up. Again, I would not expect the market to go straight down. That is a low odds bet. Okay, guys, so now all of a sudden, if we move this chart back over, all the way back over here, right, we actually have a pretty good picture of what to expect. Last week's low, open gap, open gap, open gap. These are key inflection points. 1800 to 1790 is truly a swing low area, right? 1800 important psychological level, 1900 important psychological level, right? So the first question to ask is on the gap down, right? If we open at this 1937, are we able to attain half gap or gap fill, right? Importantly, are NQ and ES in sync? And so we'll have a couple of measures of that. We know right now that Globex low is sitting at 1931 or 1930. Let's see. 1931 is right here. Close enough for hand grenades, right? 1931. Okay, so the first question I'm going to ask is, outside of the half gap, gap fill, wherever this Globex low ends up landing, are we trading above or below Globex low? The next question is for the bulls and the bears, right? If we can get above Globex low, can we get above prior day's low? Very important. We get above Globex low, but we're unable to get above yesterday's low. Sellers are in overall control, right? That's an important area. But before they get really aggressive on the sell side, what do we have to do? Get below and hold below Globex low, right? So now we have key areas. Open gaps above and below, Globex low, prior day's high, prior day's low. That should just be in a checklist for you. Really easy to check off on. And so I come in the morning. Let me give you a hypothetical on that. Come in the morning. We open up, and let's say Globex low moves down to 1920, right? So we push down to 1900, and then we get a push back up, and we hold above 1920, right? Couple of tests, dances, and it holds. It makes a move to 1962.75, right? So now you look and we go, oh, we've moved from 1900 to 1962. Buyers are in control, right? If we do not get above this 1962 3/4, we simply are going to come back for a backside test and push back down, right? If we cannot get above 1937, even if we get a strong rotation up in the morning, still opens us up to downside moves. And importantly, if we get below this 1860, this area here is very viscous. I'm going to be careful about taking counter trades in this area till we get down to the open gap. So I either need a strong response off of 1872 or I will expect 1827 next. By the same token, if we open above 1937, we open up, come for a quick backside test to get responsive buyers, and quickly get above 1962. I'm going to look for a push up to 1990. If we get above 1990, I'm going to look for a move to 2024. I have no idea if that will happen. I don't need to know it, and I don't have the advantage of having my swing indicators fire for me. And those are a huge, huge asset in this play, right? And then the last piece to realize, right, is that usually markets do not go straight down in a line, right? They, like I said, they usually there we go. They usually make U-turns, both up and down, right? So let's go through that list one more time. Again, this is for the people in the room, and I'm getting tired as well, but I want to make sure that I reiterate it. Gap down, significant gap down. First thing I'm going to do, hands off for the first 30 minutes. I don't want to get run over, right? If we're really driving hard up or down in the first 30 minutes, if I really want to stay ultra safe, I'm going to push out to the first hour of the day. I'm going to let everyone do the panicking that they need to do without getting crushed, right? Next, do I have a swing long or swing short indicator? Yes or no? Have we been able to attain half gap or gap fill, right? Are we trading above or below Globex low? Are we trading above or below prior day's low or high? I'm going to use all these pieces to build a puzzle while I'm trading. And then once I get the swing long, what I really want is, ideally guys, the further we get stretched down into this area, right? Like let's say we come here. And as you know, what I'm looking for is we build structure, we come down to the open gap, we come back in, and we close back into structure. Okay? We break back into that neckline. I'm assuming a swing long is fired on the swing indicator, right? I'm looking for this entry number 4. Entry number 4, guys, has been consistently the strongest entry for a push back to the upside, right? And given that the range, right, we're going to make an adjustment. So today, on our swing longs, we had a scale of 1 of the first 4 points. We divided up that first half of that trade and scaled over the first 4 points of P&L. And then we moved stop to break even or net break even, right? If I'm pushed way down into this 1870s area tomorrow, and I get a swing long, and I get an entry number 4 specifically, right? My plan will be, just like we did last week, to have scales every 5 points, right? So 5, 10, 15, 20, somewhere between 15 and 20, I'm out of half the trade. And then I have a decision to make in my trade plan. I'm either going to move my stop to break even or net break even. One of the two, right? And then I'm naturally going to go and look for what are natural targets above, right? But importantly, I'm going to let the indicator and the structure of the market give me my entry, right? So if we go through the entry process, right? 1, 2. If there's a zone behind 3, then trap back in 4, right? Once I get my first 15 to 20 points, stop's going to come to break even or net break even, depending on where that is. And then I'm going to let the market do its thing, and I'm just simply going to look down the field, right, and see where a logical place is for the market to move up to or move down to. We'll get the same pattern on the downside, right? Let's say we open at 18. Let's make it really disastrous, right? Why not? We're not even there yet for tomorrow morning. Let's erase this. Let's say we open tomorrow morning at 1837, right, where we're trading. We drive up right out of the gate, right, and we kind of trade sideways, and we get a swing short print, right? So the market hooks around, we get a swing short, we come back up for one more high, trap back into an entry number 4. Same thing, stop 1 point behind the swing high. I'm going to look for 5, 10, 15, and 20 point scales down. Then I'm going to move the stop to break even or to net break even, one of the two, and let the rest of the trade run as far as I think it can. In other words, I may, instead of taking scales every 5 points, now break up the balance of the trade to moving scales every 10 points as we're moving down until I either get tick divergence on the move down, an exhaustion point, or importantly, right guys, if I get a swing long indicator, I'm going to want to cover my short, or vice versa. If I'm long and I get a swing short, I'm going to want to get set up for that swing short or that swing long and come out of the trade. Okay, so hopefully this gave you some idea of what the lay of the land looks like up and down, so I don't have to do it in the morning because obviously it's exhausting and took quite a bit of time to cover. I have no idea where we're going to open in the morning, nor do I need to know, because I'm going to follow my trade plan out of the gate. I'm going to look for rotation size, and then I'm going to follow very specifically my written trade plan using both the support resistance zones, which I'm not going to show here. I publish those again for members in the room. And I'm going to wait for the swing trade indicator to also pop in to help us out a little bit more. Now, remember guys, our win rate in the room has been above 80%. I think we're actually floating at 87% over the past month. We don't have to be in a rush to take a trade, right? We do not need tomorrow to make money. We cannot fear being stopped. Okay, we already know where our stop for the day is going to be. And if we get stopped, embrace the stop. It's saving our account so we can come back and trade the following day, right? We've already, last month, despite having a record month, we had 2 days where we reached our 2 stops back to back in the month and still had a totally kick-ass month. Okay, so I cannot stress this enough. Don't be afraid of the stop. Embrace it. It's our friend. It helps us. There's nothing to fear there. Okay, we just come back the next day and do it over again. What else do we have to keep in mind? Follow the entry rules, right? The whole point isn't how many trades can we capture. The point is how many high odds trades can we capture. That requires letting go of little, ooh, I saw this, or ooh, I saw that, or oh, I think this will work. The more you have to think while we're trading, the harder a time it is to execute the trade plan. When you ask a question of your mind, it's going to go and look at all the possibilities. Possibilities open up uncertainty. Uncertainty leads to anxiety. Anxiety tends to lead to poor trading and trading losses. Simply look at your trade plan. You know on the swing trade, guys, that there's 4 entries, right? Entry 1, 2, 3, and 4. Okay, we know entry 4 is the highest odds, followed by entry 3. Entries 1 and 2 are the most aggressive, right? So know where you fall in that parameter, what trade's right for you. If you get the trade, that's great. If we get entry, let's say you only trade entry number 4, the highest odds trades, we may go all day long. We might have 100 points worth of range and never get an entry number 4, right? Or even worse, entry 4 may stop out. It's a high odds trade, but it's not a perfect trade. And I'm going to leave everyone with this tonight, and this is from Mark Douglas, okay? Because despite all my coaching, people still don't get it in the room, and it's very important to me that they do get it, okay? So hear this, please, because it's really important and it's a cornerstone of my success, okay? Your ability, this is from Mark Douglas, Trading in the Zone, okay? And let's see if we can get rid of the drawing here. There we go. I'm just going to read this. It says, your ability to execute your trades is a function of the amount of fear you generate or the lack of it. I'm going to stop there. When we're following our trade plan, our highest odds trade plan, there's nothing to think about. Oh, there's a structure. There's trap number 4. My stop is right here. I'm just going to follow the trade. Nothing for me to think about. Okay? Fear is always the result of your beliefs about the threatening nature of the environment. What could be threatening about the market? Okay, now I want to remind you that if you're scared of the stop is your friend. It's not your enemy. Please don't be scared of the stop, okay? The answer to his question is nothing. If you had the confidence and completely trusted yourself to act appropriately under any given set of market conditions. Essentially, what you fear is not the markets, but rather your inability to do what you need to do when you need to do it without hesitation. So guys, this is my message to y'all tonight. I know this has been long as hell, but I want to shorten the amount of time I have to cover it in the morning. Okay? This is my message. We have a trade plan. Who gives a damn how far the market goes up or down tomorrow? Could really give a damn. I hope it goes down 100. You want to know why? That sets me up for fantastic trades. We know that we're not trading the first half hour, so we avoid the prime area to get run over. If I'm really concerned about getting run over in that time frame, I'm going to not trade the first hour, right? Number 2, we're waiting for the swing long or swing short to fire, right? Now, the open gaps can be tricky, especially when we have volatile days. Be aware of that. If I trade the open gaps, I will probably be trading them with 10-point stops. If you can't handle it, just don't trade them, right? If it's not in your trade plan, totally fine, okay? It's in my trade plan. I'll be cutting, if I'm taking the open gaps when we're just in a free fall, I'll be taking a quarter-size trade to compensate for the 10-point stop. If you trade small, you may want to skip it. If I traded small, I would wait for one entry and one entry only if I had a small account. Swing long or swing short indicator to fire, then entry number 4. Okay? That's it. I know that has my biggest payout and it has my highest odds. That's where I'm going to focus my energy. Okay, next. Stops. 2 points, 2 stops. Well, actually, it can be more stops if you reduce the size, but I know that I will not lose more than 8 points on my full size that I allow myself to trade. I will not lose more than 8 points tomorrow. So I have a backstop to keep me safe. I'm trying to think if there's anything else. Oh, there's one last thing. You don't have to trade tomorrow. Don't forget to look at the dome. If the dome is very, very thin, the bid-ask is very thin, just skip it. Between now and December, we're going to have a million trading opportunities. You don't have to trade the market when it's at its hardest, when the ranges are at their widest. Wait till they come in. Today's a perfect example. We were able to pull 4 points out of the market and a high odds setup on entry number 4, right? And then Q also gave us an entry number 4. I didn't cover it. And we've been consistently winning. You want to grow your account. You want to get rich trading. Get consistent. Follow your trade plan. Respect your stops. Okay? And know exactly what you're doing so you don't have anxiety. You want certainty. Your trade plan gives us certainty. I'm going to follow the trade plan tomorrow. Therefore, I'm certain that I will not be harmed. I may get stopped on the day, but my trading account will not be harmed. It can survive one day stop with ease. Okay, and I'll come back the next day and I'll continue to kick ass as we move forward. At least that's certainly my hope, God willing. So anyways, have a good night, guys. I'm wiped out. Now I don't have to cover all this in the morning. We can just look at where we're getting set up. Hopefully everyone can watch this. See you guys.